Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back CTKS family. We can see over the past 24 hours we've had a bit of bloodshed in the crypto market and across the past 7 days. It's been pretty harsh. We've had some pretty significant pullbacks, and if we look over the past 30 days, the markets have been quite mixed, but a negative sentiment. Inside this negative sentiment is when I shot the update for the Profiting from CTKS Method structure course. You can make money in any market, but the thing is, you need to know when to lean in and when to lean out of a position. It's also important to know how the different markets intercorrelate and interconnect. Here we can see the S&P 500. These are the futures, and we can see that the S&P 500 since the 3rd was coming up and then it's been dumping down. But one thing to notice, when you look at Bitcoin, you can see Bitcoin follows the directional correlation of the stock market. Now, this is not absolute correlation, this is directional correlation. In the past couple of days, the crypto market did pull back quite substantially, and that's caused broad-based losses across the crypto market. One thing to understand, if Bitcoin comes down, the entire crypto market will come down far, far more. That is, no alt can escape Bitcoin's gravity. However, the longer-term perspective is for the markets to rally, and of course it doesn't feel like that right now. And it never does in these red times. The mainstream media press has basically said, because the Fed is not going to lower interest rates as much as anticipated, the markets are reacting badly. But the truth is, professionals knew that this was the case a long time ago. For example, there's a probability of up to 2 rate cuts in the next 12 months. And this has been known for quite some time. The theory goes a little bit like this. If we get stronger than anticipated economic data, the markets will react. And if we get weaker economic data, the markets will react the same way. You've really got to be careful of mainstream media news. Just watch the charts. They'll tell you exactly what you need to know. The next most important question, what charts do you need to look at? If you go to CTKSmethod.org and just scroll down the page, you'll see the cheat sheet. The cheat sheet is literally your guide to mastering price action, and there are a number of different videos to help you to fill out the cheat sheet, and more about the cheat sheet and how it works. Basically, there are 7 rows. Row 1 and row 2 are all about risk on and risk off behavior. The mainstream media news will have you think that the market price action is completely random. It is not. Or that institutions are manipulating the price. That's also not the case. Row 1 and row 2 give you an incredible insight into the market. Inside row 1, which is the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil, you can see this relationship that plays out between Bitcoin and the particular chart. They generally move in the same direction, but there's a bit of a secret here. This chart of Bitcoin has been inverted, but I wanted to show you for yourself what it actually looks like. And you can see this chart is on the 4-hour basis. Now, what was the major cause of crypto coming down just recently? It's been the spike in the VIX. The spike in the VIX has actually increased the yields and increased also the DXY and dollar yen. This is row 1. Row 1 is so vitally important to understand. And what have we seen just recently? A bit of a kick up in the VIX. This is the cause for crypto coming down. When we look at row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, we can see a more direct relationship. This has not been inverted. For a long time, there was divergence between the euro dollar and Bitcoin. It is starting to reassert its dominant relationship again, which is a directional correlation. These kind of market shocks is actually required inside financial markets to realign relationships. They certainly don't feel good, but they are required. We can see that junk bonds has been coming down in the past couple of days, but note this, it's starting to base and it's starting to form a buy arc or BA. We would anticipate upward price momentum. This is probably the last thing that people would anticipate or expect right now, but I'm preparing for it. Learning to read the different rows of the cheat sheet is vitally important, and I've given the link to the watch list so you can get a better idea of how the different rows are moving. As soon as the VIX comes up, we expect negative price momentum to hit the markets. So when we look at the major market indices, we've seen they're relatively flat. The futures are currently down at the moment. And we can see that the high growth stocks such as MicroStrategy have been hit because the crypto market has been coming down. Inside row 5, we're seeing a transfer from cryptos into stablecoins. And we can also see the total crypto market cap has been coming down. When we look at row 6, which is all about crypto, we're seeing a bit of a sign of life inside Litecoin. When looking through ADA row 7, we can see it's been hit, Doge has been hit. The memes have also been hit, and the major problem is that the row 1 references, all these futures in the VIX are a little bit too positive for our liking. But as we saw when we looked into row 2, junk bonds looks like it's starting to turn around. This will be a great relief to a lot of people. Over the past 24 hours, we've seen $400 million in total liquidations. Nearly, in excess of $250 million have been long liquidations. The longs and the shorts are continuously liquidating each other. It's just what they do. Crypto is a highly volatile asset class, and we can see over the past couple of days that sell-off has been really brutal. WIF has lost 27% of its value, ADA over 20%, Bonk over 20%, Floki over 20%. BNB has been one of the best, only losing 6%. And XRP just under 7%. Bitcoin itself has come down just a little over 9%. This is not due to any specific Bitcoin-related information, it's due to market conditions, in other words the VIX. Doing your cheat sheet is incredibly important. I mentioned at the start of the week it was going to be a very turbulent week, and this is what I was referring to. I was anticipating a lot of choppy action inside the market. Unfortunately, the VIX has been following through, and that's placed pressure across all markets, including the stock market. For example, when we look at the 1 month on the stock market, you can see there's quite a bit of red. Market volatility often seems completely random, but it is not random, it is structurally biased. Let's just pop on the indicator that's been marked up with level 1 and level 2 standard certification. We do this because we need to know where the safety nets are inside the chart that we're looking at, and of course across charts as well. What we can see recently is that Bitcoin came down to challenge this 91,743 level, passed through 2 levels of structural resistance but got stopped out at the 94,574 level, did a structural failure, had negative structural attraction back to the 91,743 where it's been caught. If you understand where the structural support and structural resistance levels are, you're ahead of 95% of people in the market. This is on a 5-minute basis just because it gives us a fairly good view of the past 24 hours. Therefore, what is the bullish case and what is the bearish case? The bullish case is that we come up and challenge the 93,656 level, get above it and get above the 94,574 level. If we don't hold on to the 91,743, we'll be coming down to the 89,600 and probably overshoot it, more likely to the 88,979 before finding support. Remember, these levels are the most statistically significant smart money buy and sell levels in existence. These levels literally give you X-ray vision into where price is going to interact with either the sellers or the buyers. You can use this information to your advantage, either by dollar cost averaging in or BORSOG trading, which is buy on red, sell on green. It is incredibly profitable. Gold has been doing very well recently because when the VIX spikes, often gold gets a bit of attention, but gold is also structurally bound. For example, we saw recently gold came into structural support at the 26.22 mark, managed to get above the 26.35, did a bit of a structural overshoot on 26.52, but got gravitationally pulled back. And we saw that gold tried to break out to that 26.72 structural sell level, but was unsuccessful. It created negative structural attraction back to the 26.52. If you know where these levels are, you can do incredibly well by trading in and trading out. And you can learn this skill for a lifetime through Level 1 and Level 2 standard certification from CTKSmethod.org. It's going to be a very volatile week inside the markets, so please prepare for negative price action but also positive price action. One thing that you need to know is where the structure is hitting inside the charts that you're looking at and across the entirety of the cheat sheet. One of the things that you can see here, when we looked at the S&P 500, it came into volatility just as the VIX was basing and came up and hit the 60-15 level of structural overhead resistance. And we can see also that it managed to pass through the 59.58, 59.41, 59.15 and start to find support around that 58.89. This is putting positive price momentum into junk bonds at the current time. And if the S&P 500 continues to cut over like this to create buying pressure, we would anticipate at least going to the 59.41. The key levels to look at for the S&P 500 are 59.41 and 58.89. If you were simply looking at the S&P 500 without the structure, you would not know where the ceilings and the safety nets are. It's very important to just figure out where they are, or else you'll literally think that when it comes down, it's going to zero, or if it goes up, it's going to a million, trillion, quadrillion dollars, aka the moon. You can literally make money in any market condition, up or down, absolutely doesn't matter. And if you would like to check out the contents of Profiting from CTKS Method structure, there's a lot of information in here that will literally be a game changer to you. And in week 3, you literally look across my shoulder or look over my shoulder as I'm doing trades in a quite ugly market and making money going long at spot. If you're serious about your education, this is the one that you want to get involved with. Keeping a positive attitude as the markets go red is a very important thing to do. Always remember, opportunities and life reset daily. You are worthy. Just go slow to go fast. Everybody is in a dying hurry to get success, and they fail to just enjoy the journey on the way through. Life is not a sprint, it's a marathon. And always remember, if you're going through a life pullback, it is literally giving you strength for the next life rally. Making sure that you learn is incredibly important. Financial markets are there to help you succeed, but they will give you lessons. And when you get a lesson, it's going to hurt because it will be through a loss. That's why we always say, we are dedicated and committed. We either win or learn and never blame. If we blame the market, we lose the lesson and the loss will be bigger next time. That's why learning pays. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.